Some of the returns you can make in crypto are wild. There's always movement. There's so much opportunity. Monoquant really is the first truly no-code strategy builder. We have all of our own data straight from the exchanges. It all is actionable by a drag and drop node. Think of a flowchart or a Figma. It's that easy.
95% of crypto traders lose money. Your own emotions can cloud judgment. And that's why trading is such a difficult thing.
You could be 100% right. And if you're too greedy, you could end up losing money. That's why I love the algorithms. It eliminates all of that stuff. And it's easier because it's drag and drop. That's, for me, the most exciting things.
I remember when you demoed this to us, and I couldn't believe what I was watching. How come no one's done this before?
We're certainly not the only ones trying to do it, but we are the only ones that have succeeded. Everyone's looking for platforms out there, and not many of them are delivering actual quality. With Monoquant, you have nothing to lose. There's no cost. Maybe you found a solution that's gonna make you a lot of money.
You're bringing something really unique to the table, and you know that, and people are recognizing that as well.
I like building something that people are using. I like something tangible. You're not just creating wealth, you're democratizing finance. So there's so many people that are literally 10 times smarter than anyone I've ever worked with, but didn't come from the right family or from the right country. So it's kind of like a win-win. We can make money, but also really help people who don't have the opportunities a lot of us have. That's the beauty of it.
Hey, I know investing in crypto is scary. It takes a real leap of faith because there are so many scams, rug pulls, and bad actors out there. It's a dangerous business, which is why 95% of people lose all their money. Well, that's why I created the London Real Investment Club, so you can access the hottest deals on the planet and use the crypto bull market to create the generational wealth that you deserve. Join my team of over 100 people from around the world that are making millions of dollars behind the scenes investing in blockchain, AI, Web3 games, DeFi, Bitcoin, and more. Don't miss out. Click the link below to book a call with one of my team now. But hurry, this bull market will end soon.
I know investing in crypto can be scary. That's why you gotta join the investment club. Pull the trigger. Let's do this.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is...
This is London Real. I am Brian Rose. My guest today is Drew Katz, the veteran trader, fintech disruptor, and blockchain innovator. You are the founder and CEO of Monoquant, the first no-code trading platform designed to bring institutional-grade tools to everyday investors. Monoquant is a powerful trading engine designed specifically for crypto that blends automation, simplicity, and transparency. You empower users to build, test, and execute data-driven strategies without writing a single line of code. Your goal is to democratize trading by giving users access to the same predictive power once only available to banks, hedge funds, and market makers. Ultimately, you believe that Monoquant is the future of trading, opening the door to new markets and new generations. Drew, welcome to London Real.
Thank you for having me.
Great to have you here. I want to start by saying that Monoquant is one of our portfolio companies here at London Real Ventures, the world's first media-powered investment firm, where our mission is to transform the world by investing in cutting-edge Web3 and AI companies while giving our partners marketing exposure across the London Real media platforms and academies. We heighten awareness, create customers, and build communities by leveraging our global audience and extensive network. Drew, we are beyond excited to be part of this journey with you. So let's jump in. What is Monoquant?
Monoquant really is the first truly no-code strategy builder. You can do all of your portfolio analytics, reporting, et cetera, automatically, but there are other platforms that do that. What really makes us special is the no-code strategy builder and all the data that's tied in. So, whether it's an indicator, an arithmetic, or all of the alternative data that, you normally see just on website, it all becomes actionable. So any data, any metric on any asset class, it all is actionable by a drag and drop node. Think of a flow chart or a Figma. It's that easy.
I remember when you demoed this to us on the Zoom call, and I couldn't believe what I was watching, because literally, like you said, it was drag and drop, and you want to pull this data from here and this data from here, and it just had everything in this beautiful flow chart. And at the end of it, you said, and if this is too complicated for you, you can copy trade one of our many other proprietary traders and trade with their algorithm. And this is coming from a guy with a seasoned trading background. And I just thought to myself, wow, how come no one's done this before? This was a no-brainer for us.
I feel like there's a variety of reasons why no one's done it before, but I think from what I'm hearing around the industry is we're certainly not the only ones trying to do it, but we are the only ones that have succeeded with some of the aspects of it where other people have not. Yeah, but you can do copy trading. We have sample models and we have lots of tutorials, as well as we are working on more educational pieces. Same things that we did with FX. Like, I used to teach courses on the ICE exchange way, way, way back in the day. Same things with FX. One of the biggest barriers with crypto is education. The more people understand it, the more people can adopt it.
You have a great quote where you said, if you can read a chart, you can build a trading model. And if you can't read a chart, you can copy verified traders with transparent results. One of the missions of Monoquant is to take what used to be this proprietary knowledge inside these hedge funds out in Connecticut back in the day and allow, normal crypto, sometimes people new to the market and degens, access to those tools. That's what you're trying to do, right?
Yeah, you don't have to code or anymore if you don't have much time, whatever it is. You can literally makes you decide if you want to buy. If Michael Saylor, who I think was a guest on this show,
yeah.
If he's, buying, you can copy trade him via Arkham. If you want to play, one of the other providers, where your, outflows of BlackRock, weather data, you name it, any data you can think about. Usually we have them now as a drag and drop, and you can take any data point, any arithmetic, and you can just drag and drop, connect it. And what's really my favorite thing is you segregate entry and exit logic. So normally your exit logic is a trailing stop or a stop loss. This one is exit logic. So the same way that you can define an entry with any arithmetic, any indicator, any data, you can do the same thing on an exit lock. So flash crashes, all these different things that are typically not available in algorithms, or if you're a manual trader, you're not able to do unless you're sitting at your desk for 24 hours, which is what's really hard because you never know when it's coming. This allows you to capture that in, it's fully automated. So that's, for me, the most exciting things.
You mentioned flash crash because we see this all the time in crypto where the price just spikes down, oftentimes spikes back up. And if with a traditional stop loss, like you're out of that trade. Whereas if you're a human at the terminal at the time, you can almost see that it looks like a flash crash. And so you can actually program that into the algorithm to just be on the eye and the lookout for things that don't make sense.
If you're looking at a screen, the flash crash is pretty obvious for the most part. And as long as you know that this asset class is good for 5 years from now, you can ignore the flash crash. It'll bounce back in a due time. So instead of having the noise, because the noise could be, in crypto, 3 to 5% easily kills your in a stop loss. This one, you can define your logic of maybe without X amount of red candles, simultaneously, you don't exit. So the noise is ignored. And so unless it really crashes again, you stay in it and you have a pretty risk averse strategy, just buy flash crashes.
And flash crashes is something that happens in crypto like 20 times more than any other market, right?
Oh God, it happens every week. It's unfortunately way too common. It's a very, very volatile market, but that's why we needed exit logic, because there's so much volatility. And even when you were right, you were wrong. And it's really hard to define. Is the normal stop loss 1%, but sometimes it's 10%, and it doesn't make sense to sell it because it's just a flash. And, that's kind of why we took that approach.
All right, talk to me about crypto because look, I started on a trading floor in 1993. I was 22 years old. I was working at Bankers Trust and I was trading this big fixed income derivatives book. Started on the swap book and moved to other exotic books. And so the first day, they literally handed me 2 phones because everybody had 2 phones back in the day. And they said, this button goes to the Chicago Mercantile Exchange where you're going to trade Eurodollar futures. This button goes to the Board of Trade where you're going to trade bond futures. This squawk box is for the guys down there 100 feet away. And this is how you trade your treasury notes, 2 years, 5 years, 10 years, 30 years. Go. And I was just like, what are you guys talking about? And everybody's shouting down things. On top of that, I had derivatives brokers that were shouting down on speakers. And I got a real good education over the next few years of what it was like to trade fixed income markets. Okay. And that was a little crazy, but that's nothing compared to crypto markets. Now, you said you had a background in FX and probably a bunch of other things. How can you explain to people how these markets differ, FX, stocks, fixed income, to crypto? And you clearly love what you see in crypto. I guess you see a bunch of just all this opportunity, but they're so different because Monoquant's designed for crypto. So you're kind of an OG guy. You've been around. And I think a lot of the younger guys in crypto look to the guys with a little gray hair. So tell me, because you've been running these models, for decades.
What I love the most about these models is the price action. There's always movement. So, you look at equities, they don't move a fraction in general over the year as much as crypto can move in a week. And if you want a good analogy for more of the gray hair people, if you look at, 2010 when we had that, say bank, I don't want to say their name. There was a fat finger accident and the market flash crashed massively. Didn't matter. I was a derivatives trader then. I actually was listening to the squawk box, the outcry. And I remember my father saying there's no good chaos or something like that. So I was like short and it was a great trade. But that type of price action I see every week in crypto.
Right.
So
that was the S&P gapping down and went back up because of a fat finger. Somebody put it in order a few points off.
I shorted the derivatives products.
Okay.
I shorted the E-mini with the max leverage I was allowed to. And my broker, I couldn't exit it. My broker called me. He's like, you're up 69 handles and 79, whatever, something stupid. Never, ever going to make a trade like that in the real market.
That handle was like a big figure.
Right. If you made 8 handles on a trade back in the day, you were great. They never, ever had anything like that in a split in less than a minute. And he's like, do you want to exit? I was like, sure. Market order. I was like, just take it right off wherever it is. It's great.
That's good discipline too.
I've never had a broker that excited and shocked that I made that much on it in 30 seconds. I was like, this is the best trade of my life. This is crypto is a little different beast, but in the traditional market, so I will never beat that.
I hope he took you to the next game.
My bonus was not appropriate for my win. We could say that.
All right, so we were kind of talking about traditional markets. The volatility there is a fraction of what you see in crypto. And so when you see in crypto, there's just so many opportunities because there's so much volatility and so many gaps and so many price discrepancies. This is why you wanted to focus Monoquant on the crypto market.
I love the price action in crypto. There's always movement. There's so much, opportunity. And as long as you trade coins that are legitimate projects that will stand the test of time, you don't have to worry about it, flashing, zeroing out and not coming back. So if you just trade what I would refer to as the majors, same way, in FX, you have the majors. So, take the top 30, 40, 50, 100 projects, as long as they have, real tech behind it and you trade them, you should be fine.
Okay.
But the more the market ages, the more it respects technicals and all these types of indicators.
Okay. This has been a pretty crazy year for crypto. Obviously, Trump was elected. We saw new highs. Then we saw some crazy lows on the back of maybe some tariff stuff. Then we saw a brand new high last week. Is this an amazing time to be trading?
It's a great time to be trading.
Intelligently.
Try to limit your emotions. Don't be too greedy, which is sometimes something I have with my discretionary book, which is why I try to rely more on the algorithm stuff because I'm always looking for that extra point. Even if I get in at the absolute bottom, I was able to load up on some Solana at like 97, 98.
Ooh, wow.
So I was very happy about that.
That was like February or something?
It was around February, March.
Yeah, I remember when that crossed the 100 mark. And, yeah,
I got rid of them.
everybody talks about buying then, but nobody actually buys them.
I literally got rid of my Miami car coincidentally the week before. And I was just like, I'm going to buy as much as I physically am allowed to buy at this time. And I think it was buying from like 97 up to 107, just fully unloaded.
Okay.
And
you traded your car for Solana.
I basically traded a car for Solana. I was pretty happy about it. It was a good deal.
But even you are human enough and smart enough to realize that your own emotions can cloud judgment. And that's why trading is such a difficult thing. And I try to explain this to people. I sat next to guys on Wall Street, and I always compare them to those bears you see in the wild that are the older bears that have these scars all over their face because they made it through all the tough times. And these prop traders on the floor that are like in their 50s, you walk by them and they got this air about them and they're a little gruff. But towards the end of the day, if you're nice to them and you bring them a coffee, they'll sit you down and maybe give you some tips, but they've been through it. And they'll be the ones that tell you, you know, the trend is your friend and all those things from market wizards, right? And, you know, don't get emotional about stock, Gordon Gekko line, right? But it really is a battle with your own emotions. It's fear and greed on a minute by minute basis. And that's why most new traders fail, right?
You could be 100% right. And if you're too greedy, you could end up losing money. And then you start freaking out and then you take an unlevered trade that you lost money in and you're like, oh, let me leverage a trade. And then you're like, oh, wait, maybe I'm going to add more money and leverage another trade. Now, instead of losing a couple $1,000s, you're out 20 grand or 200 grand, whatever, you know, you're playing with millions, I don't know. And yeah, that's why I love the algorithms. It eliminates all of that stuff. But because it's node-based, normally with an algorithm, you're kind of stuck in a box versus a node-based algorithm, all of that artistry that, if you remember back in the day, that's what trading used to be, somewhat of an art. At least that's what they told us.
Yeah.
It allows you to see, what do you see on the chart? And it's easy to quantify that because it's drag and drop. You don't have to like try to convert. It's literally as easy as it can be.
Wow. This is amazing. Okay. So they always say 95% of crypto traders lose money because they probably get emotional and they're so new to the game. They probably make all the newbie errors. Monoquant, you've literally created it to just save all of these people, right?
Yeah.
And if they don't know how to do it, you can copy someone. But like you said, you can drag and drop and literally see what you're doing. You can see what the experts are doing, and it's specifically built for crypto.
Yeah, it's specifically built for, you know, like volatility expansion, very aggressive markets. So, you know, a lot of my background was FX and derivatives. So that's kind of what I was expecting crypto to be. It is kind of like that, in my opinion, just a more fast version of that. You know, it's just a little bit quicker, a lot bit quicker. But that's really what it is. So, you know, our systems do work in crypto and that's where we're focused right now. But in the background, we also have all the data and are working on more so from regulatory stances to be able to work into the traditional markets. But it's going to be the same thing. The traditional markets need systems like this where you can keep up because discretionary trading is becoming a lot harder, and, you know, markets are, you know, extending their hours across the board. So you can't just, you know, be on and off like back in the day. There's the bell isn't just the end of it. There's extended hours and each, you know, year it seems to keep going.
So the days of the human-only trader are becoming extinct.
Yeah, I remember back when I was literally still at the funds, there was like, you know, making, you know, like, are you a quant trader or are you becoming an execution trader? They were like killing off the prop traders, which made no sense to me because like, those are the guys that understand the market. Like, that's great that you can program stuff, but if you don't know the actual market, that's where you're going to have issues. And I think that's the Monoquant edge that we have over companies is there's other people building systems. And one of the reasons maybe they're failing is because no one in there, you know, building it was an actual trader.
Yeah.
They were quant guys only. So you don't understand all of the nuances of the actual trader. You didn't actually trade.
Right. So let me translate what Drew is saying. So they hired me from MIT because they wanted me to price their derivatives models. And so you do all this quant, you know, you run all these algorithms, and then you say, look, I've got the strategy to make money. And the model is telling you what to do. Meanwhile, there's the guy on the floor who's been around for 10 years or 20 years. He's placed the bets. He's seen the crazy things happen, the black swan events. And he knows sometimes a lot better than you. And so when the model's telling you this thing, he can look at you and say, bro, you're about to make a big mistake.
How do you get out of a rat race? How do you create wealth not only for yourself, but also for the generations to come after?
I am absolutely amazed with the quality of companies that we're getting exposure to.
We go on to Zoom calls with the innovators and the folks who are building new applications in metaverse, blockchain, artificial intelligence, decentralized finance.
What's going on, everybody? Thumbs up if you can see me.
We are focusing on early stage investment.
And the quality of people that we're getting exposure to, whether it be Dan Tapiero with 1RT, Jason Ma from Open, Yatsu from Animoca.
It's been a phenomenal experience thus far. It has far exceeded my expectations.
We are focusing on cutting edge technologies.
I view it now as the best investment I've ever made. The upside I view is unlimited.
And as a retail investor, I would never get this exposure anywhere else outside of Investment Club.
See you in the investment club.
And so he's usually the guy that throttles back the model from making some big mistakes. And I guess what you're trying to say is, if you try to go all quant, you're going to get into some dangerous territory and maybe even completely break the bank. You need some of that old school knowledge or some of those old prop trading guys, and you bring that on Monoquant to the masses.
If you're a quant and you're succeeding, you're usually a very special guy. And, there are some funds, like, especially traditional, that are amazing at it. But that's not a very large population, right? For the average person, you can hop on a Monoquant and just build a strategy. You back test it. If it doesn't, maybe you want to make a little bit better risk, you can use the LLM. Then you back test again, and then when you're happy, you paper trade it and eventually go live. LLM is the learning language model.
Let's talk about AI, because I remember in the demonstration, you were like, yeah, you can plug in AI here and different types of AI. And again, this is such a new technology. I'd say most of your old trading models don't even know how to incorporate it, but you incorporate it with drag and drop. How important is it to have an LLM and AI components in your model these days?
I think the LLM just gives more for people who need more help, whether it's, explaining what this indicator does. And eventually what we're working on is to say, okay, maybe do this to fix your risk, fix your alpha, and then it can add that node for you. That's what that's for. And then in terms of AI, there's lots of stuff. We have, I think, 38 plus different AI models that you can run for your strategies and whatever, assets you want. But then we also have AI optimization, where it's literally going to run, I don't even know the numbers. It's, thousands of different variations with each one of your nodes. So each one of whatever you set up, indicator or arithmetic, and run all these different variations and then tell you, okay, this was the best result out of, however many thousands or millions of variations it's run. So for those people who don't know how to, really dial in what they want, maybe they don't have the trading experience, you run optimization and, does all the work for you.
Wow. A lot of people trading crypto only look at crypto. And I remember looking at your model and you were pulling all sorts of other data in there, S&P and NASDAQ and sometimes all this other esoteric data. Can you just speak on that a little bit about how maybe in the crypto industry, people are so focused in on, like you said, like the top 50 cryptos, when there is potentially a lot of the data you want to pull into a
There's
model?
so much, you got to realize everything's, what is it, the butterfly effect, everything is related. So like anything happening, and back in the day when we traded derivatives, you had moon phases, weather data. Now, and that's pretty obvious how that affects commodities and affects the entire market. Nowadays you have, of course, that, but you have wallet action, you have, Trump making an announcement. He bought a hamburger with Bitcoin right before his inauguration. And for me, I was like, Trump's signing off that he approves of crypto. And I bought a lot of crypto that day. And I was like, before the moment I saw that, tweet, and people didn't really understand it. But again, there's a lot of hidden messages across so many things. And we take all of this amazing alternative data like Arkham, Nansen, Parsec, Polygon, which is traditional data, and we make it an actionable node. And that's, one of the things is, so sometimes some of the data is just on a website or, maybe an alert. We put it in there as an actual trading indicator, just like you would a MACD, a Bollinger, or an RSI.
Wow. How do you how do you set yourself up with a Trump buys a hamburger with a Bitcoin node? Is it like a special news event and it can like trigger an indicator that
Yeah. You can have him be something with, I'm not sure what they don't want one of these, but you could be tracking social media. So, Elon Musk makes his tweet about something crypto related and maybe you want to look into buying that coin because he made that comment. Michael Saylor, there's a lot of, notable names that if they talk about this project, is likely to have a, bullish or possibly bearish sentiment. I mean, if Jim Cramer says, buy this coin, I would probably sell it.
Yeah. That's the joke in crypto, is that Jim Cramer is the opposite indicator.
Is it really just in crypto?
Yeah, maybe it's everywhere. Yeah, that's a good question. I see it everywhere in crypto. And whenever he is bullish on crypto, it tends to do the opposite and vice versa.
He just had this effect for 20 something years.
Yeah, I think you're right. He's a crazy man. I do respect the hustle though, for sure. It's interesting what you said about Trump and the burger, because Saylor was on stage yesterday at the Bitcoin conference and someone asked him about memes. And he said, look, I could write a book about Bitcoin. No one's going to read it. He said, I can give an hour-long presentation on stage about treasury strategy. 0.1% people are going to watch it. But if I sit there and say, there is no second best, that thing can go viral. Or he said, if baby Saylor, this is like the thing now, is going viral, where these babies say the same things that the older people say. He said, if baby Saylor, which is like a 2-year-old in a suit, says there is no second best, he said that alone can move the price more than me saying I bought an extra 4 billion of Bitcoin last week. So that's a real thing, isn't it?
Yeah. Certain people have like certain powers, and like, I don't think people look into how much there is behind it. Someone of his stature buying crypto, or using crypto to buy a hamburger, he doesn't need to use a Bitcoin to buy a hamburger. He could use cash. He's in New York. He could use a credit card. I mean, his driver probably has enough money to buy the restaurant. But like, it was a very, very much a statement. He bought it with that to show I approve of crypto. And maybe that was the sign off that crypto needed to be behind him and with him, because look, he got in office and look what he's doing. He's pushing the industry. Maybe he wants to push, some stuff back to the United States, but that was a humongous thing in my head.
Yeah, no, it was big. All right, we've talked about democratizing this automated trading and getting it to the masses. Something you want to talk about a lot is actually owning the stack and the fact that you guys build the infrastructure and it gives you performance over everything. How important is it that you do that? Because a lot of people see models out there that don't actually own their stack.
Owning your own infrastructure is probably the most important thing. It's like your engine, your car. And we don't just own our stack. We actually did all the architecture ourselves. One of the most prolific server people, if you will, in the world has become our CIO. Think somewhat of a legacy type project for him. And he did our architecture and got us the infrastructure. So if you were to run our infrastructure, it would be, anything compatible would be minimum $14-15 million a year. Think about renting a sports car versus owning it. We need to spend $2,000-3,000 a month or $2,000-3,000 a day. It's pretty much the same types of economics.
And also, what's in there and you can verify it and control it, as opposed to renting someone else's model and you don't really know what's going on there.
Well, yeah, someone, renting it, they could literally shut you down because you pull too much data or whatever. Ours, we are in complete control. We have our own, all of our own servers. We own our own Solana nodes. We own everything internally. We can literally put our hands physically on our servers and touch some of our exchange partners. So we are literally that close. And we have lots of, OG infrastructure guys who have been doing this for some of the biggest name, like Dropbox, Call of Duty, these types of guys, running our systems, making sure everything is Polygon as smooth as possible, and making sure, because that, your engine needs to work.
Yeah. Talk to me about, you use that because you don't charge users up front, right?
Yeah.
So people can just jump in and start using that. You don't actually charge for your model.
No, that was one of the biggest barriers I had. And, if you're trading with, with a company, who cares if there's like $2,000, $4,000 a month for a terminal like Bloomberg or whatever.
Yeah.
But for something that's like, prosumer, retail, whatever, this is an institutional grade product, but retail friendly, so anyone can use it. I thought having those types of fees like most of our competitors does is such a barrier. So since we own all of our infrastructure, we charge zero fees to the users. So whether it's, to build any type of model, we make money on the back end. We're not really concerned with charging them. We just want them to trade and do well. We're trying to democratize the industry.
It's powerful, man. It's powerful because a lot of people won't jump in when there's an upfront cost, and then they won't play with your model and they won't see how valuable it is. And the freemiums are okay for a while, but yeah, very big, smart move. You talk about transparency, where a lot of places, if you come in, you're kind of pushed into using their parts of their model or these systems. But for you, you want everything to be visible. People can drill down, they can see the data, they can see everything you want to do. Just talk about how important that is.
I think transparency, one of the biggest issues in this market. For instance, if you're copy trading, there's a lot of people, and I'm sure any crypto person seen this on Twitter, Telegram, Discord, you name it, a guy that's made like 6,000% in a month, but he's charging $30, $200, whatever it is per month for his course. It doesn't really make sense. If you're getting these types of returns, why are you even telling anyone about it?
Yeah.
So, for copy trading, all of our stuff is basically internally audited for everyone to be safe. Transparency wise, we make everything super easy. So a lot of competitors, you want to add a MACD or a Bollinger or RSI, you add a Bollinger or RSI MACD. With ours, you can literally break out any of the data. So you can change the periods, the amount of times it repeats over these periods, whatever you want, and you can customize any data piece, which is really, I think, one of the most unique things about it is everything is completely customized. So that's why everyone who's using it has the opportunity to generate alpha versus some competitors. Everyone's doing the same strategy. Eventually you have diminishing alpha.
Okay. Powerful. You keep talking about no code. The future is no code. It's something you guys repeat over and over again. Why is that something you're so obsessed with?
Oh, it's a favorite. Most people that claim to be no code are not no code. Their version of no code is like C+ with a fancy wrapper. If you've ever seen a Urus, it's like an Audi with a wrapper. It's the same thing. Ours is truly no code. Like I'm talking, my grandma lives in a nursing home and was able to make a strategy. I put it up on her TV and everything. I'm talking like, it's not, can you click this and they drag over an indicator, you drop it, can you connect a dot here? I would assume anyone who can set up a trading account, with any broker, exchange, is able to build it. Everyone knows who's able to have an account. What makes you want to buy Bitcoin or Ethereum or Solana, and what makes you want to sell it? It's not hard, especially with the amazing alternative data.
Did your grandma actually do it?
She actually did it.
Do you have any footage of this? This is amazing.
I have not footage of that. I have better footage. I have footage of her. She's an old New Yorker. I have footage of her leaving her nursing home room and then saying she needs to use her cane. And she's walking through the nursing home hall with her cane up in the air, using it to just show that she has it, but not actually using it. I'm like, you're 98 or 97. I'm like,
I thought she was going through celebrating her returns.
Maybe she was celebrating her returns, but it really is that easy. She built one on her TV, and if she can do it, I really think anyone can.
Dude, we're creating amazing media here. I can see the titles of these clips. I traded my car for Solana. My grandma made money on Monoquant. It's like we're stacking them up here. So it's really that simple.
She's a New Yorker.
Yeah, I love it, man. I love it. Talk to me about, we've seen some acquisitions out there, and it sounds like a lot of exchanges and other bigger players are starting to realize they need something like Monoquant. I guess I'm really talking about Kraken acquiring NinjaTrader. And it seems like there's a lot of people waking up to the fact that they need something like what you offer.
Well, if you remember, most people in this audience may not remember, but I know you do. You remember back in, 20 years ago, New York Stock Exchange, what was it? NASDAQ led it. There was Net and Arco were acquired, the electronic trading.
Yeah.
One was like 1.8 billion, and then 4 months later, the next New York Stock Exchange had acquired for just like 3 point something billion. It just shows that you have to stay up with the Joneses. So once NinjaTrader was acquired by Kraken, everybody was like, oh, wow, this is actually an amazing idea. Like, we've been telling you this. And now everybody wants to have a conversation and is really understanding the value of no-code trading, because you have to trade. You have to automate to keep up. And being able to be a developer and then actually understand trading and have a data scientist, and then the ability to plug in the APIs to automate to the exchanges and then plug in data sources and all these different things. You could be the best in the world. You're still going to take years to do this, and you can't just plug into certain places. Some of them you need contracts and entities and a lot of permissions. It's not so easy. With us, as long as you have an account with any of the reasonable major exchanges, it's just an API. It's as easy as it can be. We just cut out all of that work. You don't have to be an expert anymore. I mean, I myself went from 5, 6 strategy changes, not strategies, strategy changes in a week, to when we got the system no code, to about 2,000 strategies in a week.
Explain that. You just started playing with things.
Well, to make a change prior, I had to tell my CTO, and he had to convey it to the other developers, and then each person had to do something, because a change isn't necessarily one line of code. Like, my simple idea, for maybe a flash crash idea, is not one line of code. It could be 2,000 lines of code, who knows? Right. But if it's a node, it could be literally, drag a node over and say, if this drops in this much time, buy, and then you could drag another node over, be like, if this drops in this much time, if this has maybe 5 red candles, sell. That can be an entire strategy that could take 5 minutes to build. Anything that you can visually see, you can quantify, which is my favorite part about it. That's the artistry of this algorithm. I think that's why I'd argue you get better results than most other systems, or doing it yourself, unless you're really, really good.
So by being able to make so many different changes in a week, you were able to just play with things and to iterate and to start just building much better models.
Yeah, you make a strategy, you backtest it, you can run as many as you want. I run tons of different models, tweak it. Oh, this model's garbage, goodbye. This model has potential, let me tweak this, run the next one. Let me try these 10 different, for momentum-based strategies, what is there? RSI, Bollinger, MACD do effectively the same thing, but slightly different. Which one's going to complement your strategy the most? And then you finally found one, you dial it, and then you paper trade it. I think backtesting and paper trading might be undervalued in this industry, or in any industry, but for me, I'd much rather be safe and test it. And then once you're very happy with it, it's all the same engine, then you can deploy it live. And I think that's another issue that's unaddressed, is not everyone has the same engine for backtest, paper trade, and live. We do. So your results are going to be effectively the same exact thing across the board.
This is a perfect time. Can you explain to the layman those 3 concepts: backtesting, paper trading, and then live? What does that mean? If you had, I would say explain it to your grandma, but she sounds pretty smart. So if you had explained it to my grandma, how would you explain that?
Backtesting is just basically off of historical data, what this model would have done back on these dates that you set. So you have to set certain dates. It could be from a year ago, 2 years ago, the prior month, you name it. Paper trading,
So you come up with a new trading model where you're like, okay, I want to put this factor in there. Let me see how it would have done from in the calendar year 2024. And you run that, and it comes back and says, all right, you would have been up 600%. Okay, that's a good piece of information.
Huge.
Then that's really helpful. That means okay, I would have done really well last year. That's huge. Then you paper trade it, which means you do what? You take that same model.
So yeah, if it would have done good, especially if it does good in the bear market, it's a good model. And then paper trading is just a term for live trading with simulation. So it's basically live trading actually happening when it's happening in the market. It's just fake money. You're not risking your own money. So you want to set it to a $10,000 account to simulate what you would do. I would highly recommend paper trading before deploying live.
Right. Right. Although how many people don't do that?
I don't think many do that.
Right.
But
they backtest it. They say, let's go. They put the money on, and then they realize, maybe this didn't do.
Historical is good, but what you could have with historical, this could be the issue, is what you have overfitting, because you already know what's going to happen before it happens. So you're just tweaking for what you already know is going to happen versus real trading is kind of predicting what's going to happen before it happens. And that's why I would certainly run it on paper trade for X amount of time before.
How much time would you paper trade?
Peter Thiel took $500,000 and turned it into $1 billion using the exact same techniques we're using inside the investment club. He met a CEO, his name was Zuckerberg. He pitched him the deal and he said, okay, I'll give you $500,000. Mark went public and sold the shares to people like you. Well, what happened to Peter? Well, he exited and got a 2,300x return. The wealthy invest in early stage companies, folks. The public markets are for suckers. It's a rigged game. By the way, this happens in crypto as well. It's called pre-sale tokens. This is Solana. Does anybody know this chain? They sold pre-sale tokens for 4 cents. And you can see the date on there, April 5th, 2018. Look at Solana today, folks. That thing's up over 1,000x. The media and Wall Street and all these hype people get you to buy the top. Meanwhile, they put their clients in at the bottom and they use you for liquidity to make their clients rich. You can play this same game. You just have to have the financial education and the deal flow. That's it.
Honestly, I would do a minimum of a week.
Okay, gotcha. All right, so a week goes by, you put some fake amount of capital and they literally has to try to execute, with the volume constraints and all these things that might happen on exchanges. And after a week, you see how it did as a trading model. And you want to see that it has similar results to your back testing.
Yeah, it should have similar or, better results, but, live paper trading is the best you can do until you're truly in the trenches, like live simulation, like, anything else. There's nothing closer to the real thing than the real thing. And then you go live. Some people, if you're really confident, if you have a great strategy, you go live with your full book. If not, do a percentage of it and then, see how it goes. You have a kill switch. If you decide, I don't like, maybe I made too much, maybe I lost it. You can kill it off on your own. We will have a mobile app soon enough. We have it internally, but we're not ready to release it yet. It works great.
Really?
Yeah.
Why would you kill it if you made too much? Scary?
I don't know. I've learned the hard way that sometimes, I'll say my favorite quote, bulls make money, bears make money, pigs go to slaughter. If you make a certain amount, you may want to turn off your model and let it breathe. The market may revert. You may not be so lucky. You never know.
Yeah.
Sometimes it's good to just be happy making. Some of the returns you can make in crypto are wild. You'd be happy.
What are some of the wild returns in crypto?
Oh boy. I started off in 2016 when I was at Harvard. I turned a few $1,000s into a good few million in the first couple of months.
Months?
Oh yeah. Those days are long gone.
Why are they gone? Because there's less opportunity? And there's less people in there arbing the differences?
You're not going to see a coin go from 1 penny to 50, 60 cents in a matter of days.
Okay.
For no reason. And as the market matures, yes, you won't have the fun, crazy returns, but I think it's safer. Every time there's some crap that happens, you have some person or the market, is like, we're going to expect this and this and this from a new project to succeed. And I think even, same thing with VCs, like that ideation stuff, we don't necessarily believe in that anymore. I want to see a new project. I want to see a minimum of an MVP. If not, I want to see the tech working. We're not going to release our coin until our tech is, our tech works already, but, until we have X billions in volume, we want everything to be, working perfectly and all of our users and token holders to be getting, dividends, basically. I don't know, staking. Okay. Staking in crypto, but effectively dividends for holding the coin.
Okay. All right. And I want to get to the coin and how some of that revenue is transferred to the token holders. You've been doing this since 16. That's the other thing that's really different about you. You've been running models and you did it with your own money for a long period of time. Can you talk about that journey and why you decided to then do this?
I had a lot of success with trading and I was realizing that it was virtually impossible to do it unless you're stuck at your computer. So I was trying to figure out a way to automate it. A normal execution model works fine in traditional markets, but the market here would crash. The back end of an exchange could literally crash. And then that would click off my execution. And I would just be, out of luck because, I didn't know how to handle that. So I had to partner with my CTO, Dylan, who's just an absolute genius. I don't know how he's so smart.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.
Hey, I know investing in crypto is scary. It takes a real leap of faith because there are so many scams, rug pulls, and bad actors out there. It's a dangerous business, which is why 95% of people lose all their money. Well, that's why I created the London Real Investment Club, so you can access the hottest deals on the planet and use the crypto bull market to create the generational wealth that you deserve. Join my team of over 100 people from around the world that are making millions of dollars behind the scenes investing in blockchain, AI, Web3 games, DeFi, Bitcoin, and more. Don't miss out. Click the link below to book a call with one of my team now. But hurry, this bull market will end soon.
I know investing in crypto can be scary. That's why you gotta join the investment club. Pull the trigger. Let's do this.